Hello and welcome everyone to this presentation of Strax. My name is Hugo Lisjö and I work as an equity research analyst here at Erik Penser Bank. Now I have the honor to introduce Gudmundur Pálmason, the CEO and founder of Strax. Please go ahead.
Thank you. Just one correction, I'm not the founder. I'm the CEO. I've been around for a long time. Great to be here, and hopefully I can inform you a little bit more about Strax than what you currently know or don't know. I'm from Iceland, and the name Strax is actually Icelandic Strax, not the Swedish Strax. Strax in Icelandic means to act immediately, not like in Sweden to act later. But we've been around for a long time. The company was founded in 1995, and our core business today is basically to build and grow brands in two primary product categories. On one hand, the mobile accessories or tech accessories, as we call them. These are cases for smartphones. These are charging products. These are then also personal audio products like headsets and headphones. And we operate a twofold business model. On one hand, we own multiple brands in these product categories. And then on the other hand, we act as a traditional distributor with a core focus on Europe. In terms of numbers, our trailing 12-month sales ending in March 2022, 135 million, our EBITDA of roughly 5 million. And we've suffered, I would say, quite a lot on our core product categories since the pandemic started. So our brands are primarily sold through traditional retail. And since the beginning of the pandemic, retail, as you are all aware of, has suffered with footfall, sort of less people in the stores. And as a result, our sales in our own brands have declined through those channels. But on the other hand, our distribution business has developed quite well. We're now working hard at stabilizing our business, and primarily on the own brand side. And to do that, we've looked at sort of all of our cost elements across multiple different brands. And as an example thereof, we've already reduced our headcount by roughly 10% in the last 4 months. And we're looking at sort of further actions and activities to rationalize our brand portfolio just to get the profitability back up where we used to. So our EBITDA margin now is right around 4%, but historically we've been at 8.5%, and that's sort of where we're going to get, hopefully, within too long. I mentioned earlier that we operate a twofold business model. On one hand, a traditional distribution business where we provide value-added services to retailers, large enterprises, D2C accounts, etc. We operate a warehouse and typical sort of fulfillment services for both our own brands and third-party brands, which we work with and have worked with for a long time. And then on the other hand, we own brands such as Urbanista, Clicker, Richmond Finns, and a few others in those core categories. We believe there's a benefit in having both distribution and own brands under the same umbrella. There are synergies across these two separate businesses, but also there's a lot of intelligence that can be sort of used on both sides for the benefit, basically, of the whole. So we believe it's a strong business model we built in the last few years. The mobile accessory market and tech accessory market, including personal audio products, is massive, and we barely sort of register on the radar. And there's also sort of growth prospects in the industry are fairly solid, even though we're now in a pretty depressed external environment when it comes to growth and inflation, etc. We still feel and sort of have data that the industry in itself is still growing. And there are several factors why it's growing. Smartphone sales, sort of accessories are sold with smartphones. So you usually use a case with a smartphone sold. You use a headphone with a smartphone sold. So smartphone sales are pretty important for us. And even though smartphone sales have been sort of flat and even declined in the last 6 months, if you look at the installed base of smartphone users globally, it is growing by the day. So every new smartphone that's sold, the installed base is growing. And there are roughly 4.5 to 5 billion smartphones in use. And we consider that sort of largely to be an addressable market for our products. So that is one reason why the market is growing. Another one is people are buying more accessories per device. So in the past, you maybe bought a case and a charger. But now you buy a case, you buy a travel charger, you buy a screen protector, and an expensive headset. So the number of units sold per smartphone is increasing. And the sort of another factor and driver for the growth is average selling prices of accessories are going up. You might not see that in cases, but true wireless headphones have been driving average selling prices quite a lot in the last few years. We sort of have managed to consistently grow in the last 20 years. Slight dip in 2020 when the pandemic hit us the hardest, but still we've managed to grow in a tough and challenging environment. And we expect sort of that trend to continue going forward. And as I explained, profitability is obviously critical for us to improve. And we are looking at various different ways to improve our margins, to improve our profitability going forward. We have acquired brands, we have acquired distributors. We've also managed to sell a brand that we had acquired. We acquired a company called Gear 4 in 2015 for roughly 5 million euros. And we managed in a 3-year period to grow their sales anywhere between 10 and 15-fold, and sold the business to a large US player for 35 million. So a great investment, a great exit. And I think that sort of demonstrates and shows the capabilities of Strax to acquire or develop brands and grow them and potentially divest. And we feel also strongly that we have a couple of brands that sort of can take the same journey as we did with Gear 4 a few years ago. Coming back to our own brands, the biggest brand we have is Urbanista, which is a Stockholm-based personal audio brand. But just to give you an idea of the impact the pandemic has had on Urbanista, and that sort of applies to all of our brands. In 2019, Urbanista sold for 23 million euros products, made 3.5 million euros in EBITDA. In 2020, Urbanista sold for 17 million euros and lost 1 million in EBITDA. If you take 2020 as a standalone year and look at lockdowns in our key markets where retailers were basically closed, UK and Germany had their stores closed in excess of 150 days. Obviously, you don't sell products in retail if the stores are closed. Sweden didn't experience any lockdown, so this just as a demonstration what the impact has been on Urbanista. And the same happened in 2021. Urbanista sales went from 17 million to 13 million. And luckily, EBITDA losses didn't grow in line with that decline. We still lost right around 1 million euros in EBITDA in Urbanista. But now we see sort of a turnaround. And the biggest change for Urbanista is we're now again becoming relevant in the US market and have gained a lot of doors and retailers in the US in the last 6 months. And the additional benefit of having US now come on board strong is that you're not faced with the same margin challenge as you are in Europe due to the US dollar strengthening, because we buy all our products in US dollars. And if we sell in euros, we're buying them more expensive than in the past. So, but we're not seeing that in the US, obviously. Some of the other brands you might recognize or might not. Some of them are Swedish-based, some of them are based in Hong Kong, others in Germany. So the brands and the brand teams sit at various places around the world. Our distribution business, we acquired a German-based distribution business back in 1995. It's a very stable business and it has sort of held up pretty well since the start of the pandemic. Main reason for sort of the resilience of this business is the fact that a part of the customer base on the distribution side are enterprises. So distribution business is not dependent on retail. We sell to enterprises, meaning a Deutsche Telekom is providing a local government police force with devices. We are able to attach accessories to that. Same when they're offering VW smartphones or tablets, we can tag accessories to that. So we work closely with many of our larger telco customers to address their enterprise needs for accessories. So that's why this business has held up well, basically since we acquired it back in 2005, and especially since the pandemic started. In terms of investment case, I talked earlier about sort of the challenges we've had as a result of the pandemic. And maybe we were a bit naive, and you can maybe say that about most people. We were under the impression that the pandemic, when it originally hit, it would be a short-term thing. We would go through this sort of in a matter of 6 to 8 months. And still we're here 2.5 years later. We committed early on not to terminate anybody of our staff. We would sort of ride through the pandemic together, and which we upheld our commitment. But when sort of the end of the pandemic was continuously being prolonged, and on top of that we have the war in Ukraine and all this inflationary pressure, the US dollar strengthening, we had to really start cleaning house. We have terminated, as I said, or reduced our global employee base by roughly 10%. I believe we're going to go further than that because we have to, just to improve our bottom line and stabilize the business. But external environment is super challenging, but I think we're still dealing sort of in a reasonably good way through that. You also see, if you look at the bar charts, a product category that I haven't mentioned before. As a response to the pandemic, we launched a new business in protective personal protection equipment like face masks and gloves, and that business has been fairly strong since we launched it. But obviously, it's not a core business. Troax has been doing mobile accessories and personal audio products for over 20 years, and the health and wellness initiative was purely intended to sort of set off some of the decline in sales and income as a result of sort of the massive lockdowns we experienced across Europe. And the last slide I want just to dwell on and come back to this, the fact that we now are sort of in a phase and at a stage where we have to not only sort of stabilize the business, we also have to set the stage for growth of the own brands in particular. I'm not at all concerned about our distribution business. That will remain to be stable and strong. The own brand side of things is where we've been challenged. And we are rationalizing the brand portfolio. We're rationalizing within the brands sort of what areas they should focus on, how should their roadmap be focused, more sort of effort put into higher margin products, just to improve our EBITDA and get sort of our profitability ratios back to where they were pre-pandemic, sort of at an 8-9% ratio to sales.
Thank you for a good and presentation.
You're welcome.
Now it's time for a Q&A session. And my first question is, if we look at the geographies, which geography is the most important for you?
So our history is a little bit all over the place. The company was founded out of Hong Kong and the US back in '95. In between, we made sort of acquisitions in Europe. The most important consumer market in the world, and this is common knowledge, in terms of volumes, is the US. And in the US, just to give you an idea, you have retailers or telcos like T-Mobile in the US. They have 7,500 stores. Telia in Sweden has maybe 40, just to give you an idea of the scale. And also how fragmented Europe is relative to the US. Europe, you have numerous languages, you have numerous currencies. There's hardly a retailer that exists with more than 1,000 doors. US and North America, including Canada, They have multiple retailers with over 1,000 doors, and as I said, many over 5,000 doors. And this is obviously a key market for us to invest in and grow. And sort of the additional benefit at this point in time with the US coming on strong is that we're not facing the same margin challenges as a result of the strengthening of the US dollar against the major European currencies.
Yeah.
But Europe remains our home market, I would say. And it's important, but in terms of sort of growth and opportunities, it's obviously North America.
Okay. Yeah, and do you see any differences between Europe and the US and North America when you look at the retail market and the sales of your products?
Yeah, I think it's very evident now and in the last 6 months that European consumers are feeling sort of the impact of higher energy prices. They are super concerned about inflation, higher interest rates, etc. US is in the same boat as a country and economy, but US consumers are significantly more spending happy, if you will. They obviously are concerned about the same things, but you haven't seen in sort of these discretionary categories like we operate in with mobile accessories and personal audio products, you've not seen the same sort of contraction in US consumer and retail as you see here. So there is a difference, and we know, of course, that Americans in general are sort of more spending happy than the rest of the world, and that's why it's a super interesting market for us to address.
Yeah, and you talked about your different brands. In which brand do you see the most growth potential?
Urbanista is sort of destined to come back. I think we've improved our quality side of things. We've improved the branding. We've simplified the portfolio. We've strengthened the organization. We feel strong about Urbanista coming back. The most unique brand we have is a brand called Clicker, which is a brand where we have intellectual property, both patents and trademarks, obviously. And it's a stand and hold function for your mobile phone. And that's a category that is nobody really knows about it. It's called taxables, but it's still a $500 to $600 million category. And we've had great retail successes in the US lately, launched that product in multiple different retailers, and that really has a great potential to take off in a sort of, I would say, more than we did with Gear 4 a few years ago. So we feel great about that brand.
Okay, so Clicker has the largest growth potential.
Yeah.
But Urbanista is closer in time.
Yeah, Urbanista, we managed to grow Urbanista. We acquired the brand in 2013, and we were sort of on that trajectory, sort of exponential growth trajectory until sort of the pandemic hit us super hard. And hopefully we can sort of get back on that. But in terms of sort of sheer growth, coming from albeit a lower base, Clicker sort of has the sort of better potential to really take off and show that massive exponential growth.
Yeah. And within Urbanista, you release some new products. Mm-hmm. Can you tell us a bit more about them?
Yeah, we have a very strong partnership with a Swedish-based technology company called Exeger. Exeger is a technology company that has developed a film that can be used in commercial applications to charge your phone or device or whatever sort of chargeable unit you have via regular light or sunlight. We launched last year a headset called Los Angeles, which doesn't really have to be charged at all through a regular outlet. If you just use it in the office or outside, you never have to charge it. We just announced last week or a couple of weeks ago a new product, which will be the first sort of true wireless in-ear headset in collaboration with Exeger, where the charging case itself will have a film on it and the same sort of logic. You will really never have to charge it via a regular outlet. And the feedback from the market on that, both actually launches, when you have something unique and different, the world pays attention. And the amount of interest we've had is quite significant. Yeah. We all know that sustainability is becoming a much more important factor in everything we do, both as individuals and corporations. It's no longer just something good to have, it's a must-have. And if the Urbanista products can really support that in a sort of significant way, like we believe they can, that's definitely something that will sort of get traction in retail and with consumers at the end of the day.
Yeah, yeah. And how is the pipeline for more new developments of products and so on?
We launched about a year and a half ago 2 new brands, what we call digital native brands. The original concept was to have brands that would only be sold online.
Yeah.
And those 2 brands, one is called Grell, where we collaborated with a globally renowned audio engineer, a German called Axel Grell. He used to be the audiophile engineer at Sennheiser for 20 years. And we launched a great product. Sales have been challenged, or more profitable sales online have been challenging. As you may or may not know, Apple changed its privacy setting on the iPhones middle of last year. And all sort of social media, Google, Facebook, you name it, is becoming sort of increasingly more expensive and increasingly, on the flip side, less targeted. So it's very difficult to earn money with a digital native brand. And the same, we teamed up with 2 women that have been sort of claimed, or one actually, the fittest women in the world. So we launched a sports, female-oriented sports audio brand. And we face the same challenges. Even though they have close to 4 million Instagram followers amongst them, still getting the message out there and converting in a profitable way has been tough. Yeah. But these sort of the iOS changes last year changed sort of the fundamentals, not only for these digital native brands, but all digital native brands out there. We own other brands, maybe less exciting, but still there's a massive amount of products that are sold, just basic cases, basic chargers. So there's a big market out there which we are trying sort of to cater to.
Yeah, and when I look at the Clicker and the products there, they look like high margin products, so to say. Yeah. How is the margin within the brand and the products?
Yeah, no, it's the game changer for Clicker is twofold. So original product was a universal product that you sort of glued on the back of your phone. And sort of average retail price on that product was $10 to $12, 10 to 12 euros. And margin there was so-so. 2 things have happened since sort of the original version of the Clicker, universal Clicker. One, MagSafe. We have a MagSafe product that attaches to your phone with magnet. Yeah. It's much more sort of user-friendly in a way, because you can easily take it off if you want to charge your phone wirelessly. And that product in retail is $25 euros. And the cost of making it, yes, it's higher, but it's not sort of 2.5 times higher. No. So that margin is healthier for us. And then we've also launched Clicker cases, where you have a Clicker integrated into the case. And yes, again, a little bit more expensive to manufacture, but that's a 35 to 40 euro product. So, okay. But again, on the flip side, in the regular bread and butter business and Urbanista, for example, when the market is sort of prices in the market, retail prices in the market are coming down. Yeah. At the same time, our sort of input costs, and especially the foreign exchange rate impact, just looking at the last 12 months, the dollar has strengthened close to 20% against the euro and the SEK. That is just eating into our margin, and especially on the sort of product we launched a year ago. So we're now trying to figure out how do we improve our margins in Urbanista through sort of not necessarily sacrificing on quality, but just being a little bit smarter in the way we design and spec the products. Quality is always there, but there are ways you can improve your margins just through design and sort of specs, where an end consumer might not necessarily feel a big difference between a 9mm driver and a 10mm driver in a headset. So we're just thinking a little bit differently when we're compressed on margins. Where can we find incremental improvements? and hopefully eventually they will come to fruition, and that we can sort of see our profitability rise again.
Yeah. You talk about the currencies.
Yeah.
Do you see any other rising prices in materials you're using in your products, or?
We've not. If you look at sort of the assembly costs in China, all of our products come from China. Assembly costs or raw material costs, there have been sort of a squeeze on certain components, chips in general, on our audio brands. But labor costs in China have gone up, but we haven't seen that pushed onto our price because they sell to us in dollars. So they are getting more for their sale in their local currency than they used to. So we're using that sort of to push back on price increases coming from raw material costs. We have seen 3- or 4-fold increase in freight charges since the pandemic started. Yeah. And we're dealing with that, trying to be, again, here smarter, send more by sea versus air, etc. So we're trying to sort of mitigate these price increases wherever we can.
Yeah. And the time is running away. This was my last question. Thank you very much for coming here and presenting.
Thank you.
If you have any other questions, feel free to contact me.
Thank you.